to you, my esteemed listeners. It is yet another episode of our discussions on stocks. Are you looking to secure investments in stocks or considering doing so soon? Welcome to this video where you get updates about the stocks and businesses and companies to help you make well-informed decisions. Please do not forget to subscribe to my channel if you haven't done so already, and make sure to click the notification bell for more videos. Today we will be discussing 5 companies and businesses and their stocks. We came about these 5 after a careful selection through their profitability, stability, and even the potentials they hold for the future. All right, now, let's begin. Number 1. The Allstate Corporation. The Allstate Corporation offers property and casualty insurance in the USA and Canada. Allstate is the 3rd largest property damage insurer and the largest provider of private insurance in the United States. The Allstate Corporation was founded in 1931 and is based in Northbrook, Illinois. Sales hit record highs in 2020 at $44,791 million. It employs about 42,000 people. Allstate Protection, 86% of sales, with Allstate, Encompass, and Anzer Financial. It offers insurance for passenger cars, homeowners, motorcycles, trailers, campers, and other private insurance, even insurance companies. The company recently finalized a deal to discontinue its life insurance and annuity business to further streamline the insurer's business. Therefore, all is clear in the starting blocks for growth by attracting and divesting various activities and increasing its market share. Additionally, the company has shown an annual increase in revenue since 2011. Even in the economically challenging year of 2020, it saw revenue increase by 0.5% margins. With the challenges of the market and business operations, their ability to stay focused on making profits is impressive. The anticipated revenue growth for the coming year is 5.4%, and the EPS growth over the next 3 to 5 years is 6.2% yearly. When it comes to dividends, Allstate Corporation pays handsomely. It has only recently increased the dividend to 50%. The stocks are equally attractive and valued at a price-earnings ratio of 6.3 and a K-book ratio of 1.2. It pays a dividend of 80 cents per share paid quarterly and an annual dividend of $3.24 with a 2.3% dividend yield. The stock performance of the company in the period running from 2011 to 2021 was incredible. It started trading its stock on June 2, 2011, and closing on the 30th of April 2021. The opening price per share was $33.88 and closed at $126.80. The dividend realized per share was $14.44, with the total and an average return of 316.88% and 15.34% respectively. Starting an investment with $10,000 will yield $41,683.99 over this period. Recently, the insurance company published its first quarter results and anticipated quarterly earnings of $3.85 per share, representing a year-over-year change of plus 8.8%. Sales are also expected to be $10.88 billion, up 3.2% from the same quarter in the previous year. Number 2. Bank of New York Mellon, or BNY Mellon. Despite its name, BK is no ordinary bank. It is a large custodian and clearing firm which operated in 2 primary segments, investment management and investment services. Bank of New York provides asset management, custody, foreign exchange, brokerage of funds and global payments, trade finance, cash management services, security, and certificates. The bank is headquartered in New York City and was founded in 1784. It employs about 49,000 people with $34 trillion in assets under its custody. The Bank of New York Mellon is the 2nd largest custodian bank in the world. With the size of a bank like BK, it would be difficult for competitors. This iconic bank has its presence in 35 countries of the world. It has the scale needed to continue to grow in such a concentrated market. The bank announced its first quarter results in mid-April with overall sales, which fell 9% to $858 million from the previous year against the last quarter of 2020. However, revenue increased by 22%. The dividend dropped slightly at $0.97 per share and decreased 8% from the first quarter in 2020. This is an increase of 23% from the fourth quarter of 2020. The bank's business model appears to be resilient. The operating margin remained flat at 29% compared to the first quarter of 2020 when the bank saw unprecedented pandemic-related volumes and volatility. Nevertheless, BNY is obviously having the challenge of low interest rates and pandemics. The advantage is that when these challenges improve, the bank will benefit incredibly. The BNY also has a massive moat, and newcomers may forget about it because of the bank's infrastructure. Due to the high cost, unrest, and hassle, current customers will not quickly switch to the competitor. BNY pays a dividend of 31 cents per share quarterly and an annual dividend of $1.40 per share. It has a dividend yield of 2.43%. The stock performance between 2011 and 2021 was impressive, starting its stock trade on May 2, 2011 and closed on April 30, 2021. Through this period, it opened share priced at $28.81 per share and closed at $49.88 per share. The dividend received was $8.32 per share, with a total return and total average return of 101.7% and 7.27%. In just the same period, an investment started with $10,000 yielded $20,177.45. Number 3. Cardinal Health. Cardinal Health is one of the 3 major medical distributors in the USA besides McKesson and Ameri-sourced Bergen. The company is into delivering pharmaceutical products to hospitals, GPs, and pharmacies in more than 60,000 locations each day with an impressive logistic chain of assets and employees. Cardinal Health has a full line of products needed by medical practitioners and patients. The company is also a leading manufacturer of medical and surgical products, including gloves and surgical clothing. Additionally, the company supports the growing diagnostic industry by providing medical products for clinical laboratories and radiography departments to diagnose and treat certain diseases. The company has its presence worldwide, and it is one of the 10 significant distributors in China. It is headquartered in Ohio, USA, and employs about 50,000 people globally. The company pays a dividend of 49.1 cents quarterly and an annual dividend of $1.96.3 cents, with a yield of 3.48%. Between 2011 and 2021, the company's stock started trading on May 2, 2011 and sold for a 10-year period, which ended on April 30, 2021. It changed at $44.32 per share at the opening and closed at $60.34 per share. A dividend of $15.43 per share was realized with the total average return of 70.97% and 5.51% respectively. An investment starting out at $10,000 yielded $17,100.16 over this period. 4. Comerica Bank. Comerica Bank is a regional bank that provides various products and services in 3 segments: business bank, retail bank, and wealth management. The bank offers commercial loans and credits, deposits, cash management, letters of credit, currency management, and consumer personal financial services such as consumer loans and mortgages. The wealth management segment provides asset management, pensions, annuity products, and investment advice and broker services. The company was formerly called Detroit Bank and changed its name to Comerica in 1982. However, the bank dates back to 1849 and is headquartered in Dallas. The bank has been in operations for more than a century and employs about 7,700 people. On April 20th, the bank published the quarterly figures with impressive performances. Earnings per share at $2.43 were well above the analyst forecast of $1.38, comparing well against the losses of 46 cents per share in the same quarter of last year. The first quarter was $350 million versus a loss of $59 million in the same quarter the previous year. The company's results were supported by a significant decline in the straw pot provisions and growth in commission income. The revenue position therefore remains strong. Nevertheless, lower revenues were recorded as a result of a reduction in net interest income, but the higher costs and the reduced balance of the loans were significant drawbacks. As of March 31, 2021, total assets and essential equity were $86.3 billion and $8.2 billion respectively, compared to $88.1 billion and $8.1 billion on December 31, 2020. The efficiency ratio was 62.55% compared to 55.58% in the same quarter of the previous year. An increase in the ratio indicates a decrease in profitability. However, the revenue position remains strong. On March 31, 2021, the annualized Common Equity Tier, or CET1, capital ratio was 11.09% against 9.52%. The total capital ratio was 13.94% compared to 11.85%. Dividends of $95 million were paid, and the bank expects to resume share buybacks in the second quarter. The stock is currently trading around the 52-week high. Pay attention because the rate is close to the purchase limit. Its dividend has increased consistently, with the current dividend of 68 cents per share paid out quarterly and an annual dividend of $2.72. The dividend yield is 3.4%. The bank's performance from 2011 to 2021 was impressive, starting its stock trade on May 2, 2011 and closed on April 30, 2021. Through this period, it opened shares prices at $37.90 per share and closed at $75 $5.16 per share. The dividend received was $13.05 per share, with a total return and total average return of 132.68% and 8.81%. In just the same period, an investment started with $10,000 yielded $23,269.58. Number 5. CVS Health. It started as a drugstore in the 1960s. Since then, CVS has grown into one of the largest providers of diversified healthcare with the acquisition of health insurance company Aetna. The company has 3 divisions. 1. Pharmacy services, an administrative service for pharmacy reimbursements for all kinds of health insurance. 2. The retail/LTC segment, sales of prescriptions, pharmaceuticals, health, and beauty products. As of December 31, 2020, this branch operated approximately 9,900 retail locations and 1,100 minute clinics or walk-in clinics and websites for online retail pharmacies, LTC pharmacies, and regular pharmacies. And 3. The healthcare benefits segments, with traditional, voluntary, and consumer-oriented health insurance and related services. Combining the retail activities with the pharmacy service with walk-in clinics is one of the largest health insurers. Also, its own PPE department, CVS has grown into an integrated healthcare company with an estimated 34 million customers by the end of 2020. Each segment can provide operational efficiency to every other segment, something that gives a clear competitive advantage. CVS released the quarterly figures recently, and the price closed the day by 4.4% higher. The first quarter delivered strong revenue growth of 3.5% to $69.1 billion, compared to the $68.35 billion by analysts. Net income increased by 9.8% to $2.2 billion compared to the same quarter last year. Adjusted EPS was $2.04, up nearly 7% from the first quarter of 2020. As a result, adjusted EPS was increased to $7.56 to $7.68, from $7.39 to $7.55. A total expected free cash flow of $12 to $12.5 billion was confirmed. In April, CVS announced that it wanted to launch Health Ventures, a venture capital fund that invests in and collaborates with startup companies that focus on making healthcare more accessible and affordable. It decided to start with $100 million. The initial focus will be on technology-enabled and digital healthcare companies. CVS notes the investments it has already made through both the CVS and Aetna businesses, including Unite Us, a program connecting healthcare and social service providers. CVS is also trading around its 52-week high. The company pays out a dividend of 50 cents per share quarterly, with an annual dividend of $2 and a dividend yield of 2.4%. CVS's stock performance from 2011 to 2021 was outstanding, starting its stock trade on May 2, 2011 and closed on April 30, 2021. Through this period, it opened shares priced of $36.15 per share and closed at $76.40 per share. The dividend received was $15, with the total return and total return average of 152.84% and 9.72%. In just the same period, an investment started with $10,000 yielded $25,291.14. Thank you for watching, and see you on our next video.